With us now, Meltem Demir's, extremely cool woman, also the Chief Strategy Officer of CoinShares. Meltem, when we think about the past few months, really even the past few years if we extend it out, people, cranks have been warning that this would end in tears. Basically this big run-up we saw across the ecosystem. But when you think about what actually happened, the way that the cards fell, how obvious was it? Did it happen in the way that maybe had been expected?
Yes and no. I think there were always, as early as 2018, 2019, when the derivative side of Bitcoin markets and crypto markets more broadly really started to take off and institutional lending started to emerge, one of the common narratives in the media was, oh, leverage is going to be the undoing of crypto. And as we've talked about before, in crypto markets, leverage functions very differently than in traditional markets. In traditional markets, you can use existing securities. And what we actually ended up seeing, there were all of these rumors, all of this speculation in traditional media around decentralized finance or on-chain financial products being the undoing of crypto. And very ironically, or in sort of an interesting twist, it ended up being the application of traditional lending models, i.e. uncollateralized or under-collateralized lending, that caused this massive wave of washouts.
Were you guys exposed to that at all? CoinShares or in venture investments that you've done?
Yeah, so we had minimal exposure. We had a small amount of exposure to Terra, which was the Luna stablecoin, which were publicly listed. So it was in our Q2 financials, had very little impact on our business. So knock on wood, and congrats to our risk management team for doing a good job there. And then the big part of the ecosystem I'm still concerned about is crypto miners.
Wait, why?
So in the mining business model, mining is an interesting sort of area, and I come from the oil and gas industry. So we're accustomed in the oil and gas industry.
Like real mining, like real digging.
Real mining, real digging.
No, we're not talking computers here.
We're
talking
as big as a two-story house.
Yeah.
Drills, correct. Yeah, if you've never seen a Christmas tree, which is the thing that goes on top of a wellhead, highly recommend. But
you know what?
Tell me.
My TikTok and Instagram are like all like people doing oil drilling.
What does that
Really?
say?
I don't know. Like,
how did the algorithm get that?
It's like I like mechanical things, so it's like
Tim likes planes.
yeah, like it's like airplanes and like oil rigs and stuff. So I feel like I've learned a little bit.
Real mining.
Yeah.
So the challenge with real mining is it's very capital intensive because you have to buy ASICs, these specialized semiconductors used for mining, or GPUs in the case of Ethereum, or FPGAs in the case of zero knowledge proofs. Like, you buy physical stuff. And that physical stuff's expensive. And when you raise capital, and in particular venture capital, people don't necessarily want to give you money to buy a bunch of depreciating hardware. So you finance it. There's a lot of specialized lenders in the industry who specialize in lending using the actual chips themselves as the collateral. So if I want to borrow, say, $500 million to build a new data center to mine a cryptocurrency, I may pledge those machines as collateral to secure the loan. So there's this interesting capital recursivity that starts to happen. And what also happens is you have operating expenses. Your operating expense is the cost of energy. And no matter what type of compute you do, all computing requires energy, right? Energy in a semiconductor. And so the challenge is energy prices are rising. A lot of the contracts that facilities have in place, these power purchasing agreement or PPAs, were not well negotiated because a lot of people in the crypto mining space aren't necessarily from the traditional infrastructure space. And so energy prices rising, semiconductor prices dropping, so the value of your collateral that secured your loan is going down. They don't have collateral to top up the loan. So they end up having to sell Bitcoin at greatly reduced prices, and their price to mine a Bitcoin then starts to exceed the profit they make. So it creates this really interesting sustainable finance challenge where the fundamental economics of the business stop working.
But in a sense, that's actually similar to what happens with real oil and gas.
Absolutely.
So if the price of oil falls below
we saw this with natural gas, right? Shale gas, right?
If it gets too low, then it's not worth it to actually extract it.
Exactly. So, you know, shale gas, probably $5 or $6 per million cubic feet to get out of the ground. And gas prices for a long time were $2 to $3. So those economics don't work.
So what's that number for Bitcoin?
For Bitcoin right now, the cost to mine a Bitcoin, it really varies, right? So the operational efficiencies really depend on how you set up your infrastructure, what your power costs are, what your interest rates are on your machines, what your cost of equity is on other capital you raise.
People always tell me to zoom out though, like when it comes to the inflation hedge argument. Can we put it to bed though? Can we agree that it's not an inflation hedge?
No, because I'm going to go with the zoom out. I think the challenge is Bitcoin has never existed in an inflationary environment until roughly 9 months ago. So I do think we need to give it a bit more time.
I've never existed in an inflationary environment.
Same.
Yeah.
Although, if we look back at the data, if we zoom out enough.
Oh my gosh, yeah.
You're not going to get to the year that she was born. There was still no inflation, right?
No inflation.
Okay,
But there has been inflation in certain areas and deflation in other areas.
Yeah.
Right? Thanks to technology innovation, right? Like,
Yeah.
amazing thing. So I think those three factors taken together just create a lot of uncertainty. And then I do think the one thing that we don't talk about enough, and again, at CoinShares, we have an amazing research team. People always try to find factors, right? And understand, okay, what factors are going to influence price direction on this asset class. So much of it is narrative driven. So much of it is narrative driven. So much of it is psychology driven. And I do think there is an element of religious belief that underpins a lot of this as well.
Well, I want to get to that religious belief because we saw a lot of excitement in the last year when we saw record highs, not just for Bitcoin and for Ether, but for
Everything.
coins.
Number
right?
go up, baby.
Yeah.
Yeah, and I'm wondering if the industry, if you think the industry needs to apologize for anything.
Okay, so this is a really interesting question, and this again is where I think the consumer protection debate comes in. So on the one hand, the reason that we have a lot of the securities laws and capital markets laws we do in the United States is a regulator or an external body doesn't necessarily have the authority to say, this is good, this is bad. What they have the authority to say is, here are the rules, here's the information we need, this is what needs to be provided, right? Being publicly listed is not a barometer of quality, it's a barometer of you having filled out the appropriate paperwork and having provided financials and a level of transparency that will allow investors to make an informed decision, right? So this is about people making informed decisions. I think the challenge with crypto is so many people in 2021 especially, we saw this in 2018 and before that in 2014, so many people view crypto and so many people online marketed crypto as a way to get rich quick. So people were marketing a lot of these things as an easy button, and as you and I and everyone knows, right, there is no easy button. And I think the challenge is that a lot of people had incentives to market certain things as safe, to encourage people to invest in certain things, and also people don't want to do their diligence. The point I'm making and what I'm trying to illustrate is this is not a phenomenon that's unique to crypto. It exists in all parts of the market.
Can I just say, to maybe defend the crypto industry a little bit more, think about the traditional currency industry. Forex scammers on Instagram, I just can't. Before basically crypto exploded in the way it did in the pandemic, some of my favorite accounts on Instagram were these like Forex scammers, like flexing like their Gucci's and their Ferraris.
On the private jet with
Yes,
like
I love.
I think you make a good
piles
point
of
though.
cash.
Yes,
But you're not
yeah.
seeing those advertised in the Super Bowl.
No,
know?
but
So it
exists.
did reach a different level.
But are you saying
the cultural
Well, I mean, a
zeitgeist.
Forex scammer is different from like Coinbase buying a Super Bowl ad.
Right.
Which, by the way,
But
I
you're
love
not-
that Super Bowl ad.
Was that the QR code?
It was just the QR code bouncing around. I'm like,
Yeah.
it's kind of a baller move to spend
Yeah.
millions of dollars on a little
So,
bouncy QR code.
So it sounds like I mean, in your opinion, the industry does not have anything to apologize for. It's more like.
I think apologize is a challenging word. I think there are certain individuals who maybe behaved in a way that is not great, but I'm not a judge, I'm not a jury, I'm not an executioner. I do my best to not engage in that behavior. I never tell people invest in this, buy this, do this. So I can't speak for that. I'm not the moral compass of the industry. again, another challenge, like it's decentralized, it's leaderless by its very nature. I think it's very difficult for any one individual or entity to sort of claim moral superiority, including the US government, by the way, for this very precise reason you just articulated.
Yeah.
It's a slippery slope. I understand what you're trying to arrive at. I do think that certain executives of certain companies that lost millions, tens of millions, billions of dollars of consumers' funds, they definitely have explaining to do, and I do think they'll be held to account because a company exists under a legal structure in a jurisdiction with protocols.
But you have a really cool story where you recognized something early on when it came to Bitcoin. What did you see? When did you see it? And and how much Bitcoin did you buy then?
So on the last question,
are you a
nice
whale?
try, IRS. Not happening. I'm joking.
Okay, you're not going to tell us how much Bitcoin you bought.
No, I'm never going to tell you that.
Okay, but what was the price of Bitcoin when you first got in?
When I got in, it was around $150. And then I went through a period where when I first started working, I was making less than I had before grad school, and I was in a lot of debt because I had had a scholarship from my company to go to grad school, and then I didn't come back. So I lived in a rat-infested apartment in New York, and I used every paycheck to buy more Bitcoin.
Wow.
And then the price of Bitcoin went from $300 to $120, and I did not feel great about my life choices. But it was really funny because people look at it now and they're like, oh, did you have some intuition? I'm like, no, I just thought it was really interesting. The people I was interacting with, like I'd never interacted with people like that before professionally, and I was like, this is wild, it's fun, it's really crazy and insane.
See, I would have said, yes, I did have intuition and I can see the future.
No, be very honest.
And you're not a part of it.
And it was fun. You know what I miss? There is a certain joy in believing something that no one else believes in and willing to grind to like prove that you were right.
Are those days over though?
No.
Well,
Where you could make those kind of outsized returns on a coin, a crypto?
I don't think it's a coin anymore. I think where the world is shifting to, I do think what is going to generate outsized returns is capturing and creating, by the way, trends. So I do think identifying emerging cultural movements or communities early and investing in the financialization of those cultural movements is going to be a huge thematic trend. And so that is really interesting. It's one that a lot of people aren't talking about, aren't looking at. So I do think there's still opportunities. They're just not going to be as easy because there's a lot more capital, there's a lot more people, so you have to be willing to go where other people won't go. And lucky for me, I like really weird people, I like really weird things, and I'm willing to bet enormous amounts of money on really crazy ideas. But I think that's where the returns will continue to be.
Meltem Demirors, it's great to see you.
Great to see you.
This was
influencing.
That went okay.
Yeah, it was okay.
Yeah. We should do it again.
I'm down.
All right.
Cool, let's
All
do
right.
it.
See ya.